Hi, everyone. Thanks so much for joining us for Ask the Expert North Texas. I'm Kristen Diaz.
David Rankin, getting harder and harder for some people to even think about owning their homes. The latest numbers out today say mortgage rates have hit their highest numbers in more than 20 years. It shows up in the amount of homes that are selling these days. Goldman Sachs came out with a study that shows home prices in Dallas are almost 4% lower in the last year. There is a loss of hope for a lot of people that are moving into North Texas as they're trying to find a new home. So question is, how high can these rates go? Today's Ask the Expert, we're joined by our business analyst, David Johnson. He is in the KRLD Zoom room. So DJ, the question is, how high can these rates go?
You're not going to like the answer. You want to rethink that question. They can go a lot higher, and we've seen them a lot higher. There are a lot of people alive today and listening today that remember this fondly, that you would look back on mortgage rates like this and look, but they can go a lot higher. I don't think they will.
That's definitely one thing that a lot of people have been a little bit scared to get into the housing market. We know that how difficult it has been these past couple of months. But, the whole point of trying to, get a good interest rate, do you think people should continue to hold out?
I would think so. Right now, it's really sort of an anomaly. The last time we had interest rates anywhere near this high, we had this enormous inflation, and they were raising interest rates trying to kill it off. Well, right now, inflation's headed the other way. Right. It's just not as low as they want it to be. And so we have this sort of weird scenario right now where you have this squeeze in mortgage rates and squeeze in short-term interest rates, which has the effect of pushing up mortgage rates. But I don't know that it's going to last forever because this scenario is just different this time around. But I mean, it's not good if you don't have a choice. If you've got to relocate right now, then you've got to look, and you got to probably end up with new housing. This is the intriguing thing, is the split between existing homes, which usually are cheaper, and new homes. And new homes are now cheaper than existing homes.
Right.
Anybody who's got a house right now probably has a really low mortgage, and they don't want to sell.
At some point, though, with interest rates as high as they are now, once they do drop, how hard is it to refinance to get that lower rate?
Yeah.
Not very. I mean, because all the financial institutions make money when you refinance. That's why they're out beating the bushes trying to get people to do it. Of course, nobody's doing it right now, but it's a way to sort of make money 2 or 3 times over on a loan because you're charging fees every time. So now that'll come, and that'll come. But the question is just when you bite the bullet. I mean, there are a handful of people who are really benefiting right now, but not very many. You know who's really benefiting right now? So hypothetically, you're middle-aged, you're older, maybe you're moving from California to Texas where your kids are living. So you sell your house out there, and you come here and you pay cash, and you can really, really get a deal. I mean, you can get a heck of a deal right now if you pay cash.
Let's also talk about the housing market as a whole. Right now, we know that there are just simply not enough homes for sale. But as you talk to a lot of builders, how is this affecting them as well, for especially first-time home buyers? They just don't make $100,000, $200,000 homes anymore. They're building these townhomes that, start with a mortgage rate of, $3,000 a month. I mean, and these are supposed to be first-time buyer homes.
The king of that is D.R. Horton. It started right here in Arlington, and now they're the largest home builder in the country. But they built a lot of starter homes, and so we talked to them on the CEO Spotlight the other day about that, and they're finding creative ways. In some cases, they have the ability to buy down interest rates, which is another way of saying instead of paying 7 something right today for a 30-year mortgage, you'd pay 5 something. Now, you're going to pay for it in the long run. It may be built into the price of the home, but you're not paying it every month. Then you look at the house, and they've found ways to build houses, new construction, a lot more efficiently, a lot less expensive, using less labor. Sometimes they'll make them a little bit smaller. So the footprint, the square footage is a little bit smaller. But they really have found ways. The oil and gas business is doing this too. Technology really helps you do business. and it becomes less expensive in this case to build homes. And that's one of the reasons new homes are cheaper than existing homes.
Back to mortgage rates for just a second. With we're talking about the fixed rate mortgages at 20-year highs right now. Are people actually looking and getting talked to into doing adjustable rate mortgages?
Those are sort of becoming fashionable again. I mean, you don't want an adjustable rate mortgage that can adjust and adjust upward and keep going up. And so it really comes down to a bet. Now, I mean, I've seen some speculation that this 30-year rate, which you're talking about, that hit, I think 7.02, maybe going to 8%. Well, it's going to squeeze everybody out of the marketplace right now. But if you accept the argument that the Fed's going to win this battle and get inflation down, and consequently then interest rates are going to start coming on back down, then an adjustable rate, if you have to buy right now, makes a lot of sense, a lot more sense.
Mm-hmm. Are there any mortgage companies right now that are offering any type of incentive that might be more attractive to work with them versus someone else when these rates are kind of just how they are?
That's not the place to look. I mean, they have a cost of business. They have to acquire the money. And, if the banks are having to pay you 5% on passbook savings right now, to attract you, then that money has to be marked up along the way. Now, the incentives are going to come from the home builders, and they're going to find a way to build it in, and because they want to keep doing business, they want to keep the crews busy, and plus there's a long lead time. You got a bunch of houses, or you were talking about the townhomes and multifamily, but you have a lot of that under construction. You can't just sort of bring it on the market at a period when high interest rates and sit there and stare at it because nobody can afford to buy it. So they'll make you some deals.
You mentioned earlier when we were talking about this is that this new mark set in the last month or so that existing homes are more expensive than new homes. That really never happens, does it?
Well, not very often. I mean, at least not overall. I mean, there may be some areas that are, more attractive, and there's no place for new homes, and you always want to live close to fill in the blank. But yeah, I mean, and it's so simple to understand. I mean, you own a home that you bought 3 years ago, and you've got a 3% mortgage, and you have another kid or things change or whatever, and you'd like a bigger house, or you want to be closer to work or whatever. But if you're going to have to pay like 7%, you're going to walk away from a 3% mortgage to do that? You're not going to do that. And so nobody wants to sell. So all of a sudden, there's no supply. So you've always wanted to live in Lakewood. Well, there are no houses for sale in Lakewood because they're all, cushy. So what do? Well, that's one of the things in the market. We've talked about this, is you look at the Home Depots and Lowe's and, redos of the world, because people sit around and say, well, okay, well, let's not move, but we could knock out that wall, or we could enclose this garage. And so all of a sudden, they find a way.
Yeah, absolutely.
That's our business analyst, David Johnson, on today's Ask the Expert. DJ, always a pleasure. Thanks.
Can we talk again when interest rates are going down? It'll be more fun.
Yes.
You can be able to take more credit then.
I look forward to it.
There you go.